the ultimate chart patterns trading course in less than 10 minutes. So that sounds like a big task, and it is, but I'm going to share with you some things that are very powerful in technical analysis. We're going to look at the head and shoulders pattern, and what I'm going to share with you here for Forex, stocks, futures, crypto, and let's get really to the bottom of this, that what people teach you about chart patterns, price patterns, is mostly a malarkey. It's a half-truth. A lot of things in trading are half-truths, but the problem is if you trade with half-truth, you don't make half the money, you lose all the money. So we're going to fill out everything for you that you need to know. That's why I call it the ultimate chart pattern trading course, is to give you what you need to actually make some money. So let's do it right now. All right, so as you can see here, what we have is a typical head and shoulders type pattern. So price, first of all, for a head and shoulders pattern, it's a reversal type pattern. And so you need the market to move up, come back down, go up again, make a higher high, come back down, make a lower high, and then come back down. And so if you're not familiar with it, pretty simple. That's your shoulder. That's the left. The head is higher, and that's your right shoulder. And it's a reversal pattern. So what this is supposed to indicate is that the market's going to go down from here. And I'm here to tell you it's not that simple. And it doesn't always work that way. In fact, it doesn't work that way a lot of times. And you cannot trade this alone. So why do I say that? Because the markets, what really makes them move? That's the question you need to understand. You need to add something else, and that something else is exactly what makes the markets move, and that is supply-demand imbalance. So you can look at these chart patterns, but only trade them when they align with supply-demand imbalance. And it's basic economics. Supply-demand. More demand than supply, prices go up. More supply than demand, prices go down. So how do we do that? Let me show you one way. The tool, and you can use different tools, but the tool I'm going to use today is the up-down volume indicator. I'm showing this on TradingView, by the way, to give credit to everybody. And what you can see here is we can see the up volume, the buying volume versus the down volume, the difference. And that is the main thing. So before we add this head and shoulders, and we'll go back to that head and shoulders, we had a V bottom. So the price comes screaming down. And then how do we determine that that is a low? Well, we look at the supply-demand imbalance. And here you see that a lot of buying comes in. In fact, we want to see a big difference. So that is much bigger than everything around it. And when the market just kind of chops around here, doesn't make any big moves, goes up a little bit, but all of this is nothingness. So we can just kind of put our little horizontal lines there. And all of that is negligible. What we want to see is big buying or big selling, unusual, and not just little imbalances. We want to see big imbalances. So this would give us an indication that, oh, okay, well, this is probably going to be the low because now mega buying is coming in after this mega down move. So we need to see price and volume, not just price action. Price action by itself and a $20 bill will get you a homeopathic amount of caffeine at your, well, let's just say favorite coffee store. Okay, so that's the key. We need to see that. Now let's go back to the head and shoulders pattern and let's see how we would trade that. Now that you understand the basic concept, we see our, I'll just draw it this way to create a reference, our left shoulder, the head, the right shoulder. And okay, there's a down move, but that's just the price structure. Now we need to look at the energy of what's behind that, the money. It all comes down to the old slogan, follow the money, and that's nowhere truer than in trading. So we saw a move up here, but now again, what do we got here? We've got everything is kind of in a narrow range. So sure, you get, little supply-demand imbalances, but nothing major. And so we've got, in fact, just to look at it real quickly, okay, we got more buying than selling here, more selling than buying here, and it's just back and forth, back and forth, back and forth, back and forth, bar by bar. Again, that's negligible. That's noise. So if you're familiar with the signal-noise ratio, we're looking for a signal to keep us out of the noise. So all of this is basically we don't trade. So therefore, this head and shoulders pattern, I would not short. I don't give a mouse's left patootie that we have a head and shoulders chart pattern. Who cares? Means nothing. Again, take your $20 bill and go get your homeopathic amount of caffeine. And, well, let's see what happened. Okay, let's see here. Let's just go forward bar. And oops, we got a green bar. We got another green bar, and we go up. Up, here we go. Now we're going to go down. Now we're going to go, wait, we're going to go down. Yeah, okay, so now we're going to go way down, and we're going to get that trend reversal pattern, right? And, wait a minute, it's just kind of going sideways. Why is it just going sideways? Uh-oh, now we got problems. Now we got a big problem. All right, so this is how you determine whether a price structure, chart pattern, price pattern, whatever you want to call it, is tradable or not, whether you should trade it. Do not, I repeat, do not ever in a million bazillion years trade just price structure. I don't care. Again, head and shoulders, triangles, double tops, triple tops, wedges, whatever. In and of themselves, they mean saddle for our Spanish-speaking friends. Price patterns do not have anything to do with the market moving. What does have to do with the market moving is what? Type it below. Type it below into the, in fact, if you want to pause the video, test yourself here. Everybody will be very impressed. It's going to be public in the comments below if you get this right. And everybody's going to say, oh my gosh, that person is a genius. That woman is so smart. And, or that guy, wow, he's got it. Pause the video. Type in below in the comment what makes the markets actually move. The only thing, there's only one thing, that's the beautiful thing about trading. It's actually super simple at its core. It's about what? Supply-demand imbalance. And that's what we see here. And you need a strong signal and avoid the noise. And there we've got a strong signal up. Look, and again, you want to compare the top and the bottom. So on this bar here, big green bar, yes, but is it also accompanied by, look, very little red on the volume, so very little down volume, tons. In fact, it's the highest buying volume that you can see on the whole chart, which goes back 9 o'clock. Oh, you can't see the time step. Anyway, that goes back 9.5 hours. That's a 9.5 hour period of time. So that's super significant. That's a signal. That is not noise. The other thing that I find people neglecting in trading, is rarely taught anymore, is timing your entries. When to get in, when to get out. Everybody's concerned about price, which you should, price structure, support resistance, yes. But timing your entries, the when, it's called cycles. So I give all of my viewers, meaning you, my market timing entry indicator, absolutely free, and comes with education, absolutely free as well. So just like here, we go into a little deep dive. I give you a deep dive on the cycle indicator, how to trade it, the specifics, the dollars are in the details. So I show you how to trade it, how to set it up in charts, etc. Just go to indicatorwebinar.com, and it's my gift to you.